Hey there, good people of YouTube. Welcome back to the Stocks with Josh show. We didn't quite get much of a bounce today. The market started off in the green this morning, but after a few hours, it gave everything back, and we ended up even closer to our breakdown price point on the SPX of 36.36. For us to really determine if these markets are going to flash down from here, we need to see a break and a close beneath 36.36. If we get that break and close beneath 36.36, I can confidently say that it's very likely that we're going to flash down and hit the 200-week simple moving average. That's an area where we have come down in the worst recessions and pullbacks in the past. They've always come down and broken and hit that level. And so it seems as if right now the bears are teasing us, pulling us right up against our June lows and stopping short of moving past them. At this point, we've got to wait and see what these markets are going to do. I was hoping that the markets would move decisively today, but because they didn't, I took some risk off the table. So I reduced some of my positions. You guys know that I bought some call options in Alibaba and Norwegian Cruise Lines, and they've had little movement, but because the markets are not moving concisively in one direction or the other, I've got to default to a higher risk prevention, and so I reduced my position. If I see the markets fall, I can add that position back on. If the markets move up, I can add that position back on. But this is the type of environment that is least favorable to me, a technical trader, when the market essentially does nothing. And that's exactly what the market did today. It went up a little bit at the start. It came right back down to where it had begun. Stocks overall were red today. There was a couple outliers like Walmart and Costco were in the green throughout the entire day, and they're also not at their June lows, which is something to take into consideration, as I've been talking a lot to you guys about stocks that have not been beat up as much as the rest, and identifying that those are going to do better when this market bounces. Getting a lot of questions about the TQQQ and the SQQQ. I want to be very clear. I personally am not going to be looking at the TQQQ at all. That's not on the table for me as a technical trader right now. It's not to say that if you weren't going to sit at your computer, you couldn't pick up some TQQ gains. Remember, that's an ETF that is 3x a long position on the QQQ, which means that you believe when you play the TQQQ that the market's going up. But we're looking more at the SQQQ. And you don't want to jump into that without a plan. You want to jump into that if we get a confirmation to the downside, which is what I'm telling you on the SPX, that if it breaks beneath 36.36 and it closes, it's going to go further down. And so that's an ideal spot in my mind for me to get into the SQQQ. I just want to caution you, I can't take a bullish position right now because the charts are not bullish. So I have to confine myself to a bearish perspective. And why do we have to do that? Because that's the clearly defined trend. You don't want to fight the trend. You can speculate at a reversal in the trend like we do when we look at charts. But until you get a confirmation of that reversal or a bounce, you've got to trade with the trend. And right now the trend is down. So the only ETF we're looking at as far as a triple X leverage ETF is the SQQQ. I want to jump in and talk to you guys about Google and Tesla. I just want to identify that it looks to me as if Google is definitely on track to come back and hit that 200-week SMA. I called that out over 2 months ago, and that I just want to give you guys a more defined price target. It's between $92 and $93. It can go up or down depending on how the stock has performed. And so currently, my target price for Google is between $92 and $93. I want you guys to look with me at the Tesla chart. And I want us to remember back when we talked about 4 cycles to a stock, which is accumulation, markup, distribution, and decline. And I've been asked a lot to clarify my position on Tesla, which is a very hard stock to analyze technically from a chart perspective. But I just want to point out this. If this hasn't been distribution, in Tesla. It fits the profile I gave you guys perfectly of what a distribution profile is, which is a horizontal box with higher price action, slightly on decline. That's exactly what we've got in the Tesla chart. And so I just want to say that if I were to place a trade on Tesla, which I'm not currently trading Tesla, but if I were, I would be looking for a put option on Tesla to the downside. I heard that Larry Jones had called out a $200 Tesla, and I would agree. From a technical perspective, 200 seems as if that is a strike price that if Tesla goes into decline phase, which it would after distribution, $200 looks like where it would definitely come down and hit. Okay, I want to touch with you guys on the Fed's fund rate and its correlation with the PCE. The PCE is prices consumers pay for the cost of goods. There's a very strong correlation between these two, and there's a lot of economists that say that the Fed's fund rate needs to be equal to or greater than the PCE. And there's a very simple point I'm making to you guys today, that the PCE is currently sitting above 5%. And we've heard that the Fed has a target of 4.4 Fed's fund rate. And so this is what I'm thinking that he's thinking. I'm thinking that he's hoping that the PCE will come down to about 4.4, and he's hoping to get the Fed's funds rate up to 4.4. And I believe that at that point, when they are in alignment, he will have achieved a very important economic goal, and he's going to then hold it there and hope that the PCE continues to fall. That would be perceived as a pivot. I'm going to keep you guys aware of exactly how that plays out as well. And just so you're aware, when the Fed had failed in the past, not this Fed, but previous Feds, had failed to get that Fed's funds rate up above the PCE rate and hold it there, they had brought it up and then lowered it prematurely. That went on to give the US stagflation, which we held for a decade. And so this Fed is not going to make that mistake. He's going to get it up to the 4.4%, and he's going to hope that inflation comes down, but he's not going to lower it prematurely. But when he does lower it, we know that that's going to be the pivot that we need to look out for. Hey, let's talk about Verb real quick. My position on Verb has not changed. My position is largely around the 50-cent mark. That's the target price that I gave everybody months ago. I said it's going to come back to 50 cents. We're going to buy it in there. We're seeing that it's absolutely holding that support very well in my eyes. It has come down and fluctuated, and I've bought a little bit more at the 45 and 46 cent range. Nothing's changed about Verb. I think we're in some shaky waters. If we get some hard down days, I think we'll vacillate between 50 and 44 cents. We're hoping that that 44 cent line does not break, but you see how quickly, as soon as the market recovers, Verb just goes right back up to 50 cents. And so I'm not afraid of the Verb play. You just have to be patient with it. We're holding it. There's a number of catalyst events ahead of us that could cause it to rise, but it likely isn't going to take off until we get out of these this difficult downward trend right now. And TCRT, now TCRT is doing really well. I got back into it. I think a lot of you guys have gotten back into it. It's shot up today. We have a catalyst there on the 29th of this month. Their big reveal of these two patients that the drug that responded very favorably to the drug are going to be presented, and their health findings are going to be presented in a great big event, and that can easily cause the price to go up. We may consider playing this just like an earnings play. You may consider taking profits the night before the event. The event is the 29th, so you may consider taking profits on the evening of the 28th. If it is very well received and the information is better than expected, then TCRT could shoot up to $4-6 easily. But if the announcement isn't exactly what's expected, then it could drop down all the way back to $1.30 and $1.20. So you need to be aware of the opportunity and the risk and the way in which we're playing it. The catalyst event is the 29th of this month, which is a couple days away, and we may consider taking profits if we're up the night before. Hey, if you guys want to follow me on all my trades, you can find me on my daily videos here. Subscribe, hit the notification bell. If you want to interact with me more, you can find me over on MooMoo. There's a link in the description of this video. It is an exchange. If you open up and fund an account, they're giving you the opportunity to win $30,000 if you open and fund an account by spinning for stock. But if you put in just $100, you're given the opportunity for 6 shares up to a value of $2,000 each. But when you open up and fund your account, you can go to the Discover tab and you can search Stocks with Josh, where I have a little following and a community over there where I interact and chat with you guys daily. That's all I've got for you today. As always, we look forward to seeing what these markets will do tomorrow. I'll be there with you guys. Peace and blessings, my friends. Take care.